Do you ever wonder what you could do with all the extra money if you didn't have to pay taxes? Well, we have to pay taxes, but you can reduce them. So I want to talk about my 3 favorite tax credits, which is a great way to save money on taxes. If you don't know what a tax credit is, it's simply something that allows you to offset your taxes dollar per dollar. Meaning, if you owe $3,000 in taxes and you have a tax credit of $1,000, then that means you only have to pay the remaining $2,000. Some tax credits can be refundable, meaning even if you don't owe money in taxes, you will still get money back from the government. Quick disclaimer, I'm not a CPA or a tax professional. I'm just somebody that loves to read and learn as much as I can, especially when it comes to saving me money on taxes. So make sure that before you do anything, you get with a tax professional. The first tax credit I want to talk about is something called a saver's credit, which is basically you get a credit for quite literally saving money and putting it into a retirement account, such as a 401k, a Roth IRA, traditional IRA, and a few other of the retirement accounts I'm not going to talk about. The 3 biggest qualifications is that you have to be 18 years or older, you cannot be a student, and you cannot be claimed as a dependent by anyone on their tax return. You can get up to $1,000 back if you're single and $2,000 back if you are married and filing jointly. From the IRS website, you can see right here where it says credit rate, and then below it says 50% of your contribution, 20%, 10%. This is talking about the contribution of up to $2,000 if you are single and $4,000 if you are married filing jointly. So that means that if you meet the criteria, let's say you're head of household, so you're single, and you have an AGI under $29,250, and you're putting $2,000 or more into your 401k, that means that you can get up to $1,000 of a tax credit because 50% of $2,000 is $1,000. Realize that this is talking about your AGI, which is your adjusted gross income. So your gross income can be above this, and if you lower your taxable income below this, which there are many ways to do that, such as putting your money into a retirement account or an HSA, which is a health savings account, or many other ways, you can fall into one of these brackets even if you are making more than this. So the same is for the 20% contribution. So let's say your AGI falls in this range right here, 29,250 to 31,875. That means that you would get 20% of up to $2,000. So that would be a $400 tax credit. The second credit I want to talk about is something called the EITC, or the Earned Income Tax Credit. And this is a credit that benefits those in the low income to moderate income tax brackets. The 4 biggest requirements is that you have to be from the age of 25 to 65. You have to have some sort of earned income. You cannot be claimed as a dependent, and you have to have made less than $3,650 in investments. Also, the EITC is one of the few refundable credits, so that means that you will get money back even if you don't owe anything in taxes. You can see here if you're single and head of household and you don't have any kids, if you make less than $15,820, and then you have the numbers if you have 1, 2, or 3 kids, and then married filing jointly. And on the bottom, it shows you how much of a tax credit you can get, starting with $538 for no qualifying children, all the way up to $6,660, which is a lot, especially because this is a refundable tax credit, meaning even if you don't owe taxes, you can get this money back. Also realize that you have to be below this in earned income as well as your adjusted gross income. So there is really no moving around this. If you're not in this region, you simply cannot qualify for this tax credit. And the third tax credit I want to talk about is the AOTC, or the American Opportunity Tax Credit. And this credit is meant for first-time college students. It's their first time going through that 4-year program. They have a degree that they are working towards. If you are in that situation, this is definitely something you want to look at getting, because if you're paying for your tuition, you can get up to $2,500 in this tax credit, and it's also partially refundable. So even if you don't owe taxes, you can get up to $1,000 from the government to pay for school expenses. So here's the AOTC on the IRS website. It says you can get a maximum annual credit of $2,500 per eligible student, And then it says if the credit brings the amount of tax you owe to zero, meaning you owe nothing, you can still have 40% of any remaining amount of that credit up to $1,000 refunded to you. So that's a pretty substantial amount. So make sure if you're going to college and you're paying for it to check and see if you're eligible for this tax credit. And then on the bottom here, it says the amount of the credit is 100% of the first $2,000 of qualified educational expenses you paid for each eligible student, and 25% of the next $2,000, meaning for the first $2,000 that you spend, you can get that $2,000 credit, but to get the remaining $500 credit, you have to spend an extra $2,000 to get the full $2,500 credit. Bottom, you can see who is eligible for the AOTC. So obviously you have to be pursuing a degree. You have to be enrolled at least half-time for at least one academic period beginning in the tax year. Not having finished the first 4 years of higher education, meaning you can't have gone to college and now you're coming back and be eligible for this tax credit. You cannot have claimed the AOTC before, and you cannot have a felony drug conviction at the end of the tax year. So hopefully that's not you. That's it for my video. I hope you guys enjoyed it. Make sure you hit that like button. And if you want to see more videos like this, subscribe to my channel.